Thank you for joining us. Welcome to Arcoro's HR Hour. Today, we'll be discussing ACA compliance and the filing of your 1094, 1095Cs. Your presenters today are Michael Johnson, who is a senior attorney with my HR counsel, and Mark Meyer, who is Arcoro's Director of Professional Services. We'll be doing a Q&A at the end, so please be sure to get your questions into the chat. Okay, let's review our agenda for today. So we have ACA compliance, prepare now for ACA reporting, understanding the form, Arcoro's filing process, and that Q&A. So please get those into the chat, and I will be monitoring those. But for now, I will hand it over to Michael.
Thanks, Samantha. The ACA might be a familiar topic for many of you, but also it's an issue that's so important that it's worth revisiting, I would say even annually, to make sure that people are staying on top of things. And today we're going to talk about ACA compliance, and we're going to talk about ACA reporting. One of the issues that can come up with an employer is that maybe you're under the 50 employee threshold, which we'll talk about here in a minute, but then suddenly, fortunately, you find your business growing. You hit that 50 or above full-time employee or full-time equivalent number, and now suddenly this new area opens up for you. Part of what we're going to talk about today is what to be aware of as a new employer that's just becoming aware of and subject to the ACA. Another area that we want to talk about is if you already are at 50 or above full-time equivalent or full-time employees, that it's always good to kind of have a refresher, I would say even annually, to make sure you are complying and that you're not missing something. The reason being, and we'll discuss this a little bit further, and then also Mark will get into this with some of the software information, is you don't want to have an issue that trips you up with the IRS and then get hit with some pretty steep financial penalties. All right, one of the themes you're going to see today is prepare now for ACA reporting. And we're going to sort of give an overview on the compliance piece of it, and then maybe get into some more details with the software side of things. But why does this even matter? One of the things that we want to do, just to back up even a further step, is to maybe give a brief overview of what the ACA actually is. So it's actually called the Patient Protection and Affordable Care Act, the PPACA, but that's been abbreviated to Affordable Care Act, or ACA, as most people have heard. It's a very wide-ranging law. It was passed back in 2010. And the law basically requires certain employers to provide compliant group health coverage to employees. And if an employer who's required to do so doesn't provide the coverage, they could face some steep penalties. After 7+ years now of required ACA reporting from employers to the IRS, a lot of you listening are possibly familiar with this process and the requirements, but for those of you that are newer to the ACA reporting and have grown, as we just mentioned, this will be kind of a good overview to keep you up to speed. ACA reporting applies to what are known as applicable large employers. ALE, that's an abbreviation for an applicable large employer. And who is an applicable large employer? Well, if an employer, and we've kind of alluded to this, if you've got 50 full-time employees, and that includes full-time equivalent employees, on average during the prior calendar year, in the current calendar year, the employer will be considered an ALE, again, applicable large employer, and therefore the employer becomes subject to the employer shared responsibility provisions, which we will talk a little bit more about in the near future here, and also the employer is subject to the employer information reporting provisions. Those are items that are super important to keep aware of as someone who's subject to the ACA. There's also a time element to your ACA processes and your reporting, both in providing information to your employees and also to the IRS if you're an ALE. I'm going to touch on some of that stuff, but I think Mark is going to go into a little more detail with that a bit later in the presentation. One of the big points that we always like to hit with employers is don't leave all of your ACA work to the first quarter now of 2023, but any year going forward. Don't leave all of your reporting until the last minute. In other words, there are a lot of twists and turns in the law, and to stay on top of it, the best method is to kind of work through things over time versus trying to compress all of your required steps into a shorter period of time. Many people, and again, Mark will get into some of this, are using software, and I can say from having hand prepared ACA information for clients in the early years when software wasn't quite up to speed, using software is the best way to go. And again, that's something that Mark's going to address a little bit further. You want to use the tracking software for ACA so that you can keep track of employee names, their hire dates, their termination dates, your offers of coverage, whether the employer offered or declined coverage, the cost of the coverage, things along those lines. You really want to look at every employee with several data points for every month of the year, and that's why you don't want to leave all of your updating for the first quarter of any year. The other thing to keep in mind is that if you're a self-insured company, you may have to complete what are called forms 1095B and 1094B. And Mark will touch on some of the form information later, but that's just another twist in the road for something to be aware of. Another issue that we see is whether a group of employees could be lumped together under a common employment situation where they would be subject to the ACA reporting requirements as a group. As we had just discussed, an ALE is an employer with 50 or more full-time or full-time equivalent employees. And a small employer could be part of an aggregated ALE if you're an affiliated entity that are under common control, for example, a parent company and a subsidiary. So if you are an ALE, and then if you are an aggregated ALE, there can be additional reporting requirements for you that we will discuss a little bit further down the road, but it's just the point is that it's just another layer of complexity to be aware of when you're addressing the ACA. In keeping with our theme of prepare now for ACA reporting, there's a few things to look at as a starting point. Again, maybe you're one of those new employers who's grown and just become subject to the ACA. When you're starting to evaluate where you're at, there's a few things we're going to discuss here in the next couple slides about areas to be aware of. One thing that you want to look at is whether or not your current health plan is what's called a grandfathered plan or has grandfathered status under the ACA. What that means is that you've got a plan that was in place before March 23rd of 2010 when the Affordable Care Act was signed into law. Those grandfathered plans are allowed to offer the coverage that they did before the ACA became effective. So what you want to do as a starting point, if you're just getting subject to the ACA reporting requirements, you want to look at if you've got a grandfathered plan or not. So you'd want to determine whether any plan changes that are coming up could threaten your grandfathered status. You'd want to look at if there is a change to the plan, you'd want to make sure that your new plan parameters do meet ACA requirements. If a change to a plan does not meet the ACA requirements, you'd want to send a notice of a grandfathered status whenever a summary plan benefit is provided to participants and beneficiaries, and that's something that we'll touch on in a couple slides here. Another step that you want to take with ACA reporting is to review your plan documents. You want to make sure that your waiting periods do not exceed 90 days for a new employee who comes on to be offered coverage. 90 days is your maximum time under the ACA. You'd want to confirm that your plan complies with the requirement that there are no annual dollar limits applying to coverage of essential health benefits. That's something that gets very specific with certain plans, and we're just sort of giving an overview right now, but that's a bullet point to be aware of. You'd also want to look at your coverage to verify there are no pre-existing condition exclusions. This is something that's very important for ACA compliance. And you'd also want to make sure that an employer payment plan is not in place. So on the first 3 points here on the slide, really what you can do is you can work with your insurance broker or your insurance carrier to make sure that your plan, whatever it is compliant with the ACA. Part of the reason that you're paying premiums either, or commissions to a broker or premiums to an insurer is for them to work with you to design a plan that is compliant. So in other words, you can approach either your insurance broker or your carrier and say, whatever we do with our plan, whether it's what we're offering now or whether we make a change down the road, we're relying on you to give us information and design a plan for us that's going to comply with the ACA so that our company doesn't run into some of these penalty issues that we'll discuss before. The final bullet point on this slide is make sure that you're not, that an employer payment plan is not in place. Now, what is an employment payment plan? Well, that's an arrangement under which an employer reimburses an employee for some or all of their premium expenses that are incurred for an individual health insurance policy. So in other words, the employer gives money to the employee for their premium, or a payment plan could use its funds to directly pay the premiums for an individual policy. Those types of arrangements are considered group health plans that do not comply with the ACA. However, there's an exception to this, which we'll touch on later. Another item that you want to look at is to see if you have any tax favored arrangements that are in place regarding your health insurance plan, to make sure that, again, that you're not running afoul of the rules with the ACA. So a couple of the items that you want to look at are HRAs, which are health reimbursement arrangements, FSAs, which are health flexible spending arrangements, and then cafeteria plans. So we'll start off with an HRA. A health reimbursement arrangement is an employer-funded plan that reimburses employees for qualified medical expenses and in some cases insurance premiums. Employers are allowed to claim a tax deduction for the reimbursements they make through those plans, and the reimbursement dollars to the employees are generally tax-free. So this is an exception to what we had just talked about on the previous slide with the employer payment plan. An HRA, when properly structured, is an acceptable structure that can be used under the ACA. There's even, in fact, as of tax year 2020, a new HRA that became available. It's known as the Individual Coverage Health Reimbursement Arrangement, or ICHRA. Employers that don't offer group coverage can instead fund an ICHRA. Again, that's an Individual Coverage Health Reimbursement Account, ICHRA. Employees then can use their employer-funded ICHRAs to buy individual market insurance. That includes insurance purchased on public insurance exchanges that are covered under the ACA. With an ICHRA, that is a kind of a complex sub area of insurance and of ACA compliance. So that's something that you'd want to work closely with an expert on if you decide to use that type of arrangement. Truth be told, not a ton of employers who are subject to the ACA are using ICHRAs, but it's an option that's out there. The next item is noted on the slide is the Health Flexible Spending Arrangement, or FSA. And an FSA is a type of savings account that it provides the account holder employee with specific tax advantages. The account allows employees to contribute a portion of their regular earnings into it, and employers can also contribute into the employee's accounts. But any distributions taken by the employee from the account must be used to reimburse the employee for qualified expenses related to medical and dental services. I mean, this is a pretty familiar type of arrangement that many employees are used to with their benefit programs from their employers. But the reason why we're addressing it today is because it is something that can come into play as an employer when you're making sure that you're properly complying with the ACA. If you're using an FSA, the ACA requires that it be considered what's called an accepted benefit. And that means it's going to cover preventative service requirements under the ACA. So there are two FSA accepted benefit requirements. The first is that the employees eligible for the health FSA must also be eligible for the employer's group major medical plan. So if you're using an FSA, again, you've got to be offering a compliant group health plan under the ACA. And second, if the employer is contributing into the FSA in addition to the employee, the maximum contribution provided by the employer cannot exceed a fixed dollar amount unless the employer is matching the employee's contribution dollar for dollar. So there's just some rules in a structure of setting up an FSA if you're offering that to your employees that you need to follow to be compliant with the ACA. And again, that's something that you could speak with your insurance broker, the insurance carrier, a benefits or ACA compliance attorney, some things along those lines. The other thing to consider with an FSA is that it has to be offered through what's known as a cafeteria plan, and that's also listed here on the slide as one of the points. So a cafeteria plan is an employee benefit plan that allows staff to choose from a variety of pre-tax benefits. Employees can contribute a portion of their gross income before taxes are calculated and deducted. So in other words, it's pre-tax dollars that you'd be using into your FSA through a cafeteria plan. And the plans normally include options, an cafeterias for insurance, benefits, adoption costs, things along those lines. They've also been called sometimes a flexible benefit plan or a Section 125 plan. So again, these are just kind of some main overviews of additional items to consider if you're becoming subject to the ACA and or if you're designing a new health plan for your employees. Keeping with the theme of preparing for ACA reporting at all times, not just leaving it till the first quarter of the new year. Another requirement for employers to comply with the ACA is to provide required notices to employees' independence. One of the things that you've got to look at is the health insurance exchange notice. And what that requires an employer to do is provide something in writing to the employee with information about the health insurance marketplace. If you've got a new employee, that has to be provided within 14 days of that new employee's start date. You're not required to provide that notice to the employee's dependents, but you are required under the ACA to provide it to the employee. Another item that you'd want to look at providing to employees is the summary of benefits and coverage, otherwise known as the SBC, and also notice of plan changes. Again, we're talking about if you're subject to the ACA as an employer, these are items, notices that you've got to generate and send out or have someone do that on your behalf regarding your coverage in order for you to comply with the ACA. So with the SBC and with the notice of plan changes, you want to confirm your contractual arrangement with your insurance carrier for your if you've got a group health plan, or you'd want to confirm the arrangement with your third-party administrator if your company is self-insured, and make sure that they are providing the summary of benefits, coverage, and notice of plan changes on your behalf. If they don't do that for you, you should provide that. The employer should take on that responsibility and provide it to employees and their beneficiaries at specific times during the enrollment process and if they request it. So most employers do use either their insurance company or a third-party administrator to send out these notices on their behalf, but if they haven't made that arrangement for someone to do that for them, that responsibility defaults to the employer to get that done. So this is another piece of the compliance puzzle in providing required notices that you want to have locked down as an employer, whether you're doing it or whether you've got an arrangement with someone to do it for you. You also need to make sure, as briefly mentioned, that anyone who's in the plan, whether that be the employee or a dependent, is provided with notice of any material modification to the health plan that would affect coverage. And that has to be given out no later than 60 days prior to the effective date of coverage change. So you also have a responsibility as an employer to let the covered individuals and dependents know about changes 60 days in advance to anything that would be happening with the plan. And again, if you don't have someone doing that for you as an employer, you've got to take that on yourself. In keeping again with our thought of making sure that you're ready for handling ACA reporting, there's several pretty important things that we want to go over here regarding responsibility for an employer. If you are an ALE, again, applicable large employer, 50 or more full-time or full-time equivalent employees, you are then subject to the ACA employer shared responsibility requirements. That's also sometimes known as pay or play. In other words, if you don't play along with the rules and offer health insurance to the people it's required to be offered to under a compliance insurance plan, if you don't play in that manner, then on the flip side of that, you are going to be required to pay the IRS. Due to the complexity of the law in this area, we advise employers, if they're not sure, to talk to knowledgeable employment law counsel to make sure that they know whether or not they're in compliance with their pay or play responsibilities. An important step, obviously, that we've been discussing during this portion of the presentation is to determine your ALE status for the upcoming calendar year. And you do that by calculating the average number of full-time employees and full-time equivalents during the year of the previous year to see if you're covered for this year. So we've also talked about there can be rules where if your company has common ownership, if there's common management, even if your individual company doesn't have 50 employees, you could be considered an aggregated ALE based on common ownership with other companies, and that could bring in everybody, all of the related companies, into the ACA reporting status as an aggregated ALE. So that's another factor that you need to look at, and if you're not sure about that, that's where you again would want to speak with a tax professional or employment counsel to assist you with that. The next thing that you want to do would be to figure out if your group health plan coverage is offered to the full-time and full-time equivalent employees and their dependents using a measurement method through your software. And that's something that Mark's going to be getting into in just a couple minutes here. But you need to look at whether or not an employee has worked average 30 hours of service per week or 130 hours per month to see if they cross that full-time employee threshold. Again, we so strongly recommend using software, and we also recommend consulting with counsel if you're not sure. If you are offering coverage as an employer, again, an ALE, you've got to make sure that your coverage is affordable. For example, for tax year 2022, the coverage is considered affordable only if your individual only policy, the cost of that per month does not exceed 9.61% of the employee's household income. That percentage of affordability changes every year, but that's something that you need to be aware of. And again, you can make that determination using software, and if unsure, consulting with another expert. The coverage offered also has to be providing what's known as minimum value, and that means that it pays for at least 60% of covered healthcare expenses, and also provides substantial coverage for inpatient and physician care. You can look at different charts online to determine if your plan offers minimum value, but many employers, again, go to their benefits broker or insurance carrier for assistance in saying, I need a compliant plan. The other thing to look at, again, and this is the scary part of the ACA, is that if you're not following the requirements discussed above, is that you could be subject to a penalty from the IRS. There's two different types of penalties that could be incurred. One is called an A penalty, and that refers to a specific section of the U.S. code addressing tax issues. An A penalty can occur if an employer's group health insurance doesn't offer minimum essential coverage to 95% of full-time employees, and at least one of those individuals receives a premium tax credit. The second type of penalty is known as a B penalty, and that means a full-time employee did not receive an offer of coverage, or a full-time employee received an offer of coverage, but that coverage was unaffordable or did not provide minimum value. If you receive a penalty, or if you're flagged for penalty, you'll receive from the IRS what's known as a 226J letter. You do not want to receive one of those. For tax year 2022, the penalty amounts for the A penalty is $229.17 per employee per month, so $2,750 per year. B penalty is $4,210 per year, and that gets multiplied by all of your employees minus a certain number. So even if one employee gets a premium tax credit because of a flaw in your plan design or the coverage that you offered, your company's assessed penalties for basically all of your employees, and that's why the ACA penalties get so astronomical. We are still within the reporting window of the ACA. There are some deadlines coming up, but right now I'm going to pass over to Mark to have him talk about the software and then some of those deadline issues as well.
All right, thank you, Michael. So yeah, moving into the forms. So everything that we've talked about so far, we're talking about plan design and how to remain compliant with the law. The other part that we have to do is initiate the filing. So each year we need to file with the IRS. And so the first thing we want to do is talk through some of the forms and make sure that we understand how these forms work, what the data is that goes into it, and what it indicates to the IRS. So the first form we're going to take a look at is the 1095C. We heard a little bit earlier about 1095Cs versus Bs. I'm going to focus on the C forms today. The B forms are very, very similar. The circumstances for using them are just slightly different. So on the 1095C, the first section we're going to talk about is parts 1 and 2. So primarily this includes, in part 1, we're looking at the employee demographic information, who is being reported on this form, and then the applicable large employer member, so which EIN did this individual work for and is being filed under. So the meat and potatoes of this part of the form is really lines 14, 15, 16, and then sometimes 17. So line 14, this is the offer of coverage. As you look through those different offer of coverage codes, it is indicating what was offered to the employee, what kind of coverage was offered to the employee. Line 15 indicates the lowest cost for employee-only coverage for 1 month of coverage to the employee. So that's the employee-only level. It's not family tier, it's the employee-only. And then line 16 is the safe harbor code. I generally tend to think of this as what did the employee do with that offer of coverage? Did they enroll? Did they not enroll? It's also helping, these codes are indicating that minimum value, minimum essential coverage, which dependents were offered coverage. That is part of the differentiation of all those codes. Last year we saw that there were some additions to these codes for really the first time in a while, and that was dealing with those ICRA plans or individual contribution HRAs. So we are able to support, just as a side note on the Arcoro side, we are able to support those codes. We don't generate them, but you can update your ACA data in order to report them on the forms. And if that's something that applies to you and you are utilizing our services, we'd be happy to walk you through how to do that. But the zip code line 17 you're going to see is blank on most of these forms. The vast majority of our clients do not use ICRA plans. But if you do, you would need to report that in line 17 as well. The next part of the form is going to be part 3. So the second page has a bunch of instructions. So this is actually page 3, but it's part 3 of the form. And this is only going to be populated if you are offering self-insured coverage to an employee and that employee elected the self-insured coverage. So the first thing you're going to see on this particular part of the form is that the box in the top right is going to be checked if they enrolled in self-insured coverage. And then the lines below that are all going to indicate which individuals were covered. So this would include the employee and dependents. and for which months were they covered. If they were covered all 12 months, you'd see the all 12 months box checked. So this part is really, in many forms, is going to be blank if your coverage is fully insured. If it's self-insured, the system will calculate this on the Arcoro side, but it would need to be filled out for those self-insured coverages. In the event that it's fully insured, that information is still reported to the IRS, it's just reported through the insurance carrier. The next part that I want to take a look at is transitioning to the 1094C. So when we're filing with the IRS, we have these two different forms. The 1095 is sent out to the employees. That needs to be postmarked or delivered electronically to them. And that is, there's a specific deadline for that we'll talk about at the end of the presentation here. But the 1095 data is also sent to the IRS that goes into the forms, as well as the 1094. The 1094 serves as basically a cover page or cover sheet for your filing. It says to the IRS who is this filing for, which entity is it for, which EIN. It also indicates how many forms are being included, and it basically instructs the IRS on what to do with the data that is contained, all that 1095C data. So on this first page, we're really looking primarily at who is the entity, and then there's some general information, including the total number of forms that are being filed for the EIN and with this particular filing. One thing I want to call out in particular that causes some challenges when filing with the IRS is that all of the members of the 1095, or all 12 months of the EIN rather, need to be included with this 1094. And also, we want to make sure that that authoritative transmittal is checked when filing with the IRS, assuming that you don't have data coming from multiple sources for different parts of your population. If you're in that situation, we probably want to talk through how to accomplish your filing. But primarily, most of our clients are going to have all of their employees on the system here. We can pull it all at once. But that initial filing needs to be authoritative. That can cause some issues when filing with the IRS otherwise. The next part of the 1094C is giving some summary information about the coverage that was offered. So let me go ahead and click onto the next page here if you don't mind. But in the column A here, it is going to be indicating whether or not you offered coverage to at least 95% of your full-time population that importantly met minimum essential coverage. This is really important. If there is a no in any of these, that's generally a flag. We see a lot of our clients, if you identify no here, it's a pretty quick audit for the IRS to take a look at your data a little bit more thoroughly. Now, there are some situations where no is appropriate, perhaps in an acquisition or a new entity that's being created. But in general, we want to see yeses here because that's basically saying we're being compliant with the employer mandate. But so at least 95% of your full-time population offered minimum essential coverage. That value is calculated in our system based on the offers of coverage that we see in the 1095 data. It also includes an employee count for both your full-time and your total employee count in columns B and it's pretty small there, but I think it's C. The last thing here in that last column is an aggregated ALE indicator. So I mentioned this a little bit earlier when Michael was talking, but there are group situations where you have multiple ALEs that are being included in an aggregated group. And if that is the case, that box would need to be checked here for any month in which the EIN is a member of an aggregated group. And then the next part of the form in part 4 is going to be indicating who were those other group members. So this is really just a listing, and it instructs the IRS on which entities are a part of this group. It makes a difference in terms of how they determine whether or not you're compliant with the guidance there. So those are the forms, 1095 and 1094. Those are the ones that are, for most of our clients, being filed with the IRS. These are generated out of the system, and all of the raw data available here for you to review as you're taking a look at the forms in the system. I'm going to move on now into specifically a little bit about the Arcoro filing process. So that information is really true for everybody. Now we're going to step into what happens in Arcoro's system in terms of generating your data and the review process. So the first thing is, what are our services? So Certainly, we have a benefit administration platform, an employee management or employee workforce platform. It is gathering all of that demographic information, all of the election and eligibility information, everything that Michael was talking about earlier, and it is using all of that data to derive your ACA codes. So that at the end of the year, when you generate all of your data, it is using everything that's happened throughout the year to make those determinations. Now, importantly, it's only as good as the data that goes into it. So you've probably heard garbage in, garbage out 1,000 times in a lot of different contexts. This is another one of those. So it's really important that we're keeping good data hygiene in the system, and we also have an audit checklist I'll hit on in a second that helps walk through some of those hygiene activities. But the first and most important thing is that we're able to derive those ACA codes, use those to generate your 1094 and 1085 forms. We are able to handle multiple EINs, whether or not all of those EINs are in the system. We won't be able to generate data for those that are in the system, but we're able to help with that aggregated indicator and listing those even if they're not in our system. There's also variable hour employee tracking. So this is taking a couple of steps back before the forms to who should be offered coverage. So obviously that's your full-time population, but if you also have variable hour employees, which are not necessarily working a consistent full-time schedule, for which you're tracking and determining, are they meeting the standards, that minimum of 30 hours a week or 130 hours a month on average over a measurement period, we're able to handle all those rules, import those hours into the system, or track them natively within the system so that you can make those determinations on who should be offered coverage as a full-time equivalent employee. So all of those things are able to be handled within the ACA module. And then lastly, we are able to assist you with filing with the IRS. So in that process, we'll talk a little bit more in a second. But basically, when you generate your data, we have some tools that helps you review that data and ensure that you are filing what you want to file and it's accurate with the IRS. And then once you've provided that consent for us to file on your behalf, we'll take that, file with the IRS and return the filing results of either accepted with errors, or rejected, help you work through those when you get that feedback back from the IRS. So I mentioned the pre-audit checklist. This is actually a shout out to a previous training that we did. I think this was back in December. But if you go to the listing here that we have online, you'll be able to go back and take a look at that recording. We talked a little bit more about the pre-audit checklist and how to prepare specifically in our Arcoro system your data so that you have an easier review here at the end of the year for your ACA filing. But this is all available on Support Central. I believe at the end of this, we'll send some links out so that you can get to this if you need it. But this walks through several of the areas of the system that you want to check and make sure are up to date and accurate so that your data, when it is derived, when you generate your ACA data, that you have accurate codes that are being derived. So it's a great resource for you. We also have a lot of resources around the actual filing process you can receive there as well. Next, I'm going to jump into the system just a little bit, a couple of screenshots on the right-hand side for what the system actually looks like. But I want to hit on a couple of areas that we see often trip up some of our clients as they are preparing their data. So things to keep in mind, make sure are up to date before you do that data generation so that you have less to review and less to fix later. So the first thing here is the employee's ACA profile. So this is called, in the system, is called ACA status history. And what this is doing is giving us a snapshot in time of all of the employment changes that are going back in time throughout that employee's work history, so that we know for certain in these months they were full-time, they should have had an offer of coverage, or their ACA status was full-time, so they were full-time equivalent, needed to have an offer of coverage, or perhaps their benefit status was inactive, they did not have an offer. It helps us to be able to build that historical information that goes into that code derivation process. So it's really important that this is maintained and accurate. The good news is that as you're using our system, every time you make these changes, it is going to insert that new line into the ACA status history for you. But really important that we don't have duplicates, we don't have gaps, and that the employees are associated with the right EIN if you have multiple employers in the system. The next thing I want to take a look at is the medical benefit configuration. So most of your benefits in the system actually don't go into ACA, it's just medical. So while that may be other issues if you don't have good data there, medical is the one that really impacts ACA reporting. So the first thing, this note here, all applicable medical plans should be configured as minimum essential coverage or meeting minimum essential coverage and minimum value. You have to tell us, everything that Michael was talking about, what goes into that plan design and making sure that you're in compliance with that legislation is extremely important. I can't tell you, whether your plan meets that design or not. That's something you want to be working, with somebody like Michael who can give you that type of legal advice or tax advice or compliance guidance. But what I can tell you is, how the system works here. So in the system, there's a few fields in your medical plan build that you want to make sure are accurate, and that is, does the plan meet minimum essential coverage? Does it meet minimum value? And is it self-insured? Those things make a significant difference on the codes that are derived. So to get to that, you would go into your menu, settings, benefit management, click into your package, medical plans, and then you'd be able to go in and make those adjustments. If you have a waive plan that is set up separate from your plans, you'll want to make sure that the waive plan also indicates the minimum essential coverage and minimum value, because even if they chose to waive, we want to indicate they waived coverage that met both of those criteria. So that's just the way that the system works in that case. So important, these are accurate. The last thing on this is the premiums. So premiums go into line 15. Each year, the minimum, the federal poverty line changes slightly, and the percentage by which that's calculated for line 15 changes slightly. So we put that value into the system each year so that your data is derived accurately. But essentially, if you offer coverage that is above that line versus below that line, it makes a difference in the codes that the system derives. Assuming all of the other factors that go into this are the same and meet these criteria, the difference between a 1A and a 1E. There are some other factors that go into it. So I'm not saying that all of your plans would be into that category, but that for the majority of our clients, that's the difference, is whether or not the premium is going to be above or below that line. And then lastly, so generating your forms. I'm only going to touch on this briefly today. There is a ton of documentation in Support Central if you are filing with us. Also, once you file with us, we will send you an email on each of the EINs for which you would like us to file, with links to all of these instructions and how to get information from us, get help, etc. But when you generate your forms in the system, you will go to Menu, Settings, Affordable Care Act, Forms, and then Generate. So this is where it's going, and everything I just talked about is pulling all of the information in, it's creating the derivation process, it's deriving your codes, and it's populating the raw data that is used to create your PDF 1095 and 1094 forms. Now, if you're filing with us, we take that raw data and we convert it into XML and send it to the IRS for filing. So we're not actually sending your physical 1095 forms, just the data behind it, but those forms then can also be posted electronically via the system to those employee records and help you with that distribution, as long as you've received that consent from your employees to receive things electronically. But when you do this generation, you'll pick the reporting year. It should default to the current year right now to 2022. Try to make that easy. You'll also choose the EIN. Those will be set up as employers in the system, so you'll just be able to select that from the menu here. Enter the contact individual and phone number. Important on that, by the way, that is the contact the IRS will use to contact you if there is a discrepancy, if there's an inquiry, if there's a fine, any of those types of things. So you want to be reachable by that, but also maybe don't put your personal cell phone in, because this is also printed on all the 1095s. So it should be a place that employees, can look into for help, but also that the IRS is going to be able to reach you at. So very, very important. The couple of the settings that matter here, you can choose your offer method if those apply to you. This is where you would choose the authoritative transmittal, as well as a couple of the settings that go into part 1 of the 1094 form and the 1095 form. So once this is all generated, I don't have a screenshot of this here today, but that raw data is created and the PDFs are created, and that's posted on the View Forms tab. And you'll be able to pull that information from there, review it, provide us your consent to file, and also post those electronically to employee records. So that's just a quick high level on the process. A couple of things I also wanted to make you all aware of, product updates this year. First and foremost, every year we have to create the new forms for the new tax year. So Tax Year 2022 forms are available out there right now for you to generate and utilize for your your reporting. You can take your data out of the system and file outside of Arcoro if you want to. Again, we also have that filing service here for you as well to try to make that as easy as a process as possible. The other two things, a couple of iterative improvements, enhancements into our software. We're constantly trying to improve our derivation process. So one was inserting the employee status history when records are imported. That's something that in the past wasn't automatic, had to run a separate process to do that. So that makes things easier on our implementation team, makes it easier on you moving forward. And then the second thing is that improving our mid-year rehire reporting process. So rehires sometimes gave some issues in terms of reporting the earlier part of the year. And we have enhanced that code derivation so you have less to review and fix at the end of the year when you're getting ready to file your forms. If that's something that impacts you, you have a lot of rehires and it's been a pain point in the past, and this is news to you, reach out to our support team, reach out to our ACA team. We're happy to give you some more information on that. But the short of it is that it's going to be a better process for you. And there's also some information in our release notes that we are sending out on an ongoing basis. Lastly, last slide for today, and then we'll get into some question and answer if you have any. And it's important deadlines. So really, really important. The first deadline that's coming up, these are, I guess, slightly out of order. I apologize for that. The first deadline that's coming up is February 28th. If you intend to file by paper with the IRS, the deadline is February 28th. Most of our clients file electronically, but this is certainly something that you can do if you would choose to. Print all of those forms off and send them in a paper packet to the IRS. But that deadline is actually before the postmark deadline for your distribution of your 1095 forms to your employees. So keep that in mind. March 1st, and then basically the same time here, March 2nd, the next deadlines that are coming up. March 1st, if you intend to file through Arcoro, that's the date we are asking you to provide your data to us and your consent to file. We do that for a couple of reasons. You may be asking, why are you asking that full 30 days ahead of the filing deadline with the IRS, which is March 31st? There's a couple of really important reasons. One, you may have missed some stuff. When you file, or when you send your data to us to file, we run it through a code validation tool that we've developed that identifies any types of issues that we see within the forms. Now, I can't tell you what the right codes are to file. Again, I'm not a lawyer, I'm not a legal advisor or compliance advisor, I can't give that to you. But I can tell you that these codes we know don't go together. Or I can tell you that you have a no in column A on the 1094C part 3, and that is, that's a big deal. If you meant to file a yes and you're filing a no, you want to avoid those types of issues. So if we see anything that we believe would be a problem for you in filing, we'll kick that back to you and say, check these things out, make sure this is what you actually want to file. The other thing that happens is that if the IRS site to receive the data goes down, we have no control over that. And the date, the receipt ID that is generated when the IRS receives your file is completely controlled by the IRS. So if their site goes down and your file is sitting there waiting to be received and it ticks past that March 31st, you're now late. So it's very important that we get these things processed early enough that we're avoiding those types of issues. So March 1st is the deadline internally for Arcoro that we're asking you to give us your consent to file and to provide your data to us. March 2nd is the postmark deadline for your 1095C forms. That's been automatically extended by the IRS from January 31st. And then March 31st is the drop dead date for filing with the IRS, both your 1094 and 1095 data. Okay, we covered a lot of stuff. So hopefully you have some questions. You put those in the chat as we've gone through. Certainly can send those to us afterwards if those come up later. But we're here in the next little while to pick our brains if you have questions. Pam, I can see you talking, but I can't hear you.
One thing I'll just add very quickly, folks, on what Mark had just said. he made a very important point in using software for filing is that you've got to enter good data on the software on the front side of things. So it's really important as a user of software when you are going to input the ACA data on your plan specifics, your company, and your employees, that you put in good and accurate data on the front side. That's a very important factor to consider. A second thought that I had as Mark was speaking is that, and it goes along with good data, is the IRS for the first several years of ACA reporting and filing provided something to employers which was known as good faith transition relief, meaning if you tried to do something properly with your ACA filing and you did that in good faith, they may have waived a penalty for you if something was assessed and you later corrected the mistake. I personally worked on many penalty abatement issues for clients with ACA matters and used that good faith argument to success. Well, as of December of 2022, in an official IRS publication, that's now gone. You've got no good faith argument you can make to the IRS anymore that you tried to do a proper ACA filing or tried to meet deadlines required for reporting or giving items to employees on time. That's all gone. So you've got to really lock in, as Mark mentioned, with good data, and you've got to really follow those deadlines. I just wanted to add that in quickly.
That's a really good point. Yeah.
All right, can I test my audio? Can you hear me?
Hey.
Yay. Okay, good. So the first question is, Mark, this is for you. If forms are sent electronically, are they emailed to all employees, active and terminated, or just available on the Arcoro site?
Good question. So the forms are not emailed physically from the site. They are delivered securely to the employee record within the platform. So this is important. While it may seem convenient to be able to email out these forms, it does contain a lot of PII and PHI. We want to be very intentional about how we're sharing that. So active employees would be able to receive them through the platform. Terminated employees, would not. So I would probably have a plan to at least send out those terminated employees the 1095Cs. While it's not necessarily required to file your taxes, it is still a requirement on the employer to provide them to the form. Michael, correct me if I'm wrong on that. So you want to make sure you're staying compliant with that.
You still have a reporting requirement as an employer for former employees, and you also have a requirement as an employer to former employees of providing them with the proper documents relating to ACA.
Okay, we have two more here. And just let me know if this is something that you'd like to take offline with this specific company. But we have, how do we produce 1095s for only specific business units? We have several, but only want to produce for 2.
So in regard to business units, it matters how it's set up in the system. So I assume that those business units are synonymous with EINs. On that page, a couple of slides back, when I was talking about generating forms, there's a spot there that you choose the employer. So certainly, we can. Yeah, perfect.
Oh, well, I missed it. There we go.
There, that one right there. So in here, there's a drop down that says choose the employer. You'll also notice there's a spot in here that's talking about eligibility rules. So there's a couple of ways you can handle it. The best way is let the system do the derivation for you, right? Grab all the employees that you have based on your data. That way you're just validating it, pulled the right people in. But run it for that specific EIN. But if it's a mix, right? You have, I don't know, your business unit and your EIN are not synonymous. They don't mean the same group of people. You may need to utilize an eligibility rule in order to accomplish that. That basically gives you the ability to write a rule in the system that says include only this portion of the population. So you can handle it. If it's just EIN, pretty easy. It's working as designed. If it's more complicated than that, you may need to reach out to us and ask for some some guidance on how to build that eligibility rule. I'd be more than happy to help with that.
Great. And last one, what status is acceptable in the ACA status box on the employee screen in core? And employee/employee screen in core. That might be subjective to the employee's actual status, but I'll let you answer that.
It is subjective, yeah. So the short answer is the right one. So whatever that employee's status should be is what we should reflect there. So there's 3 fields there. And in fact, if you go back, please, Sam, to my first of these 3 pages right here, it's employee ACA profile. Yeah. So I think this is what you're talking about. If it's not, feel free to reach out to us here and happy to talk more specifically. But there's these 3 statuses here, and it is employee status, ACA status, and benefit status. So if an employee is full-time, which is probably the majority of your population, the ACA status should also be full-time. That one I can state, you know, that's how the derivation process would work in Arcoro. If it's a part-time employee, that ACA status becomes a lot more subjective because I don't know whether or not they should be considered a full-time equivalent employee. So that's based on the hours worked or based on your, you know, your program. I know there's plenty of our clients that will offer benefits to part-time populations so that they, you know, they make the variable hour tracking portion of this will be easier on themselves because they know they've offered everybody. So there's a couple of different ways that, you know, folks can approach that, but basically it's what was the employee really in the system, and that benefit status is important. That's driving their access to benefits. So again, if it's full-time, a full-time employee here, I would expect to see full-time, and active. If it was a terminated employee, then at termination, the ACA status can stay full-time, but I would expect to see employee status to change to terminated, benefit status to change to inactive. But it's going to be subjective and employee by employee. If you're concerned that things weren't captured in this screen correctly, I would definitely compare against your payroll employment data and just make sure that it's up to date so that the derivation is accurate.
Great. So we will do one more. In Arcoro, can we generate the forms more than once to preview before we send for filing?
Yeah, good question. So you can generate as many times as you want. So in that process, go take a look at the documentation. It'll walk you through it. But the first time you generate it, don't click authoritative transmittal because it'll lock it onto that screen, and I have to have the developers clear it out later if you don't want it to stay there. So generate your file, look at your data, audit it. Highly recommend that. And then you'll have probably some things to audit, to adjust. You'll see here's a full-time employee that for whatever reason they were offered coverage, but there's something wrong on the record. We got to fix so the code's derived correctly. So fix those, regenerate your data. Once you're happy with it, generate it one last time and click the authoritative transmittal. And then you can also select the option to post those to the employee record. But you can generate as many times as you need to in your auditing process to make sure that your data at the end is accurate and what you want to file with the IRS.
Great. We appreciate everyone's time today. If you have any questions that come up in the future, please reach out to us, reach out to your account manager. We look forward to seeing everyone throughout February on our 9 at 9s. Thank you, Mark and Michael.
Thanks, everybody.